Margin compression is a number one topic with all, transportation providers right now. And basically what happened was during COVID, there was a time of opportunity, right? So a lot of these freight companies saw the opportunity to make a lot of money.
Before we get started with the show, here's a quick word from our sponsor, Global Training Center. As trade compliance professionals, you want to make sure that your procedures and documentation are completed as correctly as possible to avoid any delays and possible fines. We provide a range of trade compliance courses that will fit your needs. From in-person or web training to recorded on-demand courses, we can train one or even thousands on your team through your learning platform or on our portal. We can even customize a private session for your team. Go to globaltrainingcenter.com to find out more.
Hey everyone, welcome back to our show. And so today we're going to, no pun intended, cross into a different lane or try to just kind of move into a little lane, a different lane, which is logistics. Only because there's a lot of, when you see a Venn diagram, you can see trade, logistics, and there's a big, you would see a good crossover there between those two. So this was brought forth. We discovered, Andy and I, we went to TPM earlier this year, but we discovered a whole new part of the business, which is logistics, transportation, shipping, containers and all that kind of good stuff. But I was invited earlier. Before that, I was invited to be a speaker at a conference in Colombia, in Cartagena, where I got to speak about the trade compliance culture and forced labor and all that to a bunch of people in logistics. So that was but that's where I got introduced to this group called Lean Solutions Group. We had them on our show introducing the conference as well. But Andy, and then you and I, almost soon after that, went to TPM, where we discovered again, not discovered, but got introduced to. Thank you to the people at the Journal of Commerce and S&P Global that had us there as guests as well, and we just managed to find this new audience and people that we can talk to about everything we like to talk about.
Yeah, different trade. Well, and the thing is that it was so great. The folks from the TPM stands for the Trans-Pacific Maritime, and that was the TPM 24 conference there in Long Beach. And it was just opened up a whole new realm for our audience. And apparently those folks are enjoying our show, and it's been a great exposure for them as well as us. So now I'm looking forward to having this discussion here with our guest today on several things here. So why don't you introduce Abby and bring her on?
Sure. So as part of my visit to Cartagena, I met a bunch of wonderful people out there and people that work within Lean Solutions Group. And of course, the ones that are the most vocal, or not vocal, but active within are obviously salespeople and people who are promoting their company, and so in that I got to connect with Abby Hafenbredl, and so we decided to invite her on here. I had been collaborating a little bit with their marketing people and their operations people a little bit, just to figure out a way that we can introduce this topic to our audience, and so Abby reached out to her, and she was very generous in saying, okay, I'll come on. How about tomorrow? So here we are 24 hours later. And so Abby, welcome to the show. Thank you for coming on on short notice.
Absolutely. Thank you for having me. I'm excited.
Tell us about what you do there then at Lean, and a little bit introduction there for Lean.
Absolutely. Yeah. So I work at a company called Lean Solutions, and we basically set up satellite offices for US-based companies to do back office roles that easily can be done remote. So a lot of the companies that we work with are transportation and supply chain companies. So I think about 90% of our probably 600 customers are freight brokers, freight forwarders, asset companies, tech software companies in the industry. So we've really developed a niche and have been the go-to provider and partner for a lot of US-based shipping and transportation companies.
So we were talking offline there a little bit, is that we're going to be getting into a discussion today on, like some of the transportation industry, and I guess as it relates, are you looking at like international or domestic transportation type situations, or what do you want to talk about here?
Yeah, so anything really. So for a little background, I worked in transportation for about almost 10 years at a couple different freight brokerages, asset companies, and we were primarily, domestic, full truckload, over the road. But here at Lean, we work with all types of companies. And we can handle any sort of really operation. So like freight forwarders, it's a lot of international paperwork that our people are like going through, data input and that sort of thing.
I was just going to say, there's been a recession in the like the trucking industry and in the multimodal industry, where there's been a drop actually in some of those types of volumes.
Mm-hmm. Yeah, volumes overall for a lot of manufacturers and shippers have decreased year over year. And that has to do with a lot of different things, like consumer spending, the rise of e-commerce, and I would say the rise of like final mile deliveries and customers' expectations of needing fast and reliable service has escalated higher than it ever has. And then you add in, labor shortages, issues with the infrastructure, bottlenecks at the ports. It's kind of created this like ball of momentum, negative momentum, I guess you could say, that normally the market would have kind of started flipping long ago. That's not a phrase, a long time ago. And that's what we're seeing right now. It's kind of a new market we're in, with all of these things kind of happening at once. And I think a lot of people in the industry are looking at what is going to be the next model in our industry, in brokerages, freight forwarders, asset companies, and how we're going to sustain kind of the new normal in our market. So it's very interesting over past years.
Well, Abby, I was going to say, Lalo, Abby has hit on a lot of the topics. We've had individual topics on several things that you just talked about over the last year or so.
Perfect.
The port congestion. It's look at you, and you've got a great summary on this. So it's like, I love it.
But that's also the cool thing, and that's why, like I said, if you look at a Venn diagram, you're going to see trade and logistics here, and then somewhere in that crossover, I mean, there's always a correlation. I mean, truckers cannot move stuff without stuff being cleared through trade, right? And then vice versa. There's nothing to move if in the trade industry, if the people aren't moving it, you know what I mean, or shipping it. So exactly, and then that's the main reason why I'm excited about trying to bring this new, and again, no pun intended, move into that lane a little bit, and kind of cross over a little, just so that we can get a more holistic view of the industry and the business, which is really cool. But like Andy said, Abby, it's like we've had guest after guest talk about a little bit of about all those little things that you talked about. Supply chain resiliency is huge. People just talk about how are you going to. I mean, and I guess it applies to your industry too. Logistics resiliency, right? I mean, I guess we can start with the pandemic, how things affected it, and then how moving forward and how it was before and all that. I guess correlate all that together in your conversation. I'm assuming that would be a natural route to talk about. So
for sure, yeah, absolutely.
Well, you were mentioning it's like a new business model, if you will, in this particular realm. So what is it that you're seeing? You've got this. I mean, things have kind of tanked in some things. Obviously, there are some issues where people are needing to, company-wise, transportation companies should have adapted and may not have or whatever. But what do you see the current situation? And then we can talk about what's the next step?
Margin compression is a number one topic with all, transportation providers right now. And basically what happened was during COVID, there was a time of opportunity, right? So a lot of these freight companies saw the opportunity to make a lot of money. So you had asset companies buying more trucks, like thinking this is our time to get rich. Brokerages adding a ton of resources, hiring a ton of people because there's just an excess of opportunity And so like for us at Lean, we got a ton of customers because everyone needed help. It was good, it was great business then. Now fast forward, and it's just obviously gone downhill from there, with a lot of the things that I talked about with volumes, labor shortages, tech adding into a lot of these companies. So all of this infrastructure that was added, now they don't have the demand anymore. So, there's a lot of drivers that had to leave their trucks sitting because it's cheaper than, paying the insurance, and the very low rates just didn't make sense for a lot of companies to keep moving the freight. So margin compression is a huge topic. So right now, a lot of companies were assuming and forecasting that the market would shift by now, and the transportation industry goes in cycles. So there's ebbs and flows, and when there's a down, there always is a rise. Right now, the rise is not going as quickly as a lot of these companies were expecting. So they assumed by now they could kind of make up for all the losses in the last 2 years, really. And they're realizing this could very well be a new normal, and it'll slowly start to get better and improve. But it will probably take a lot more companies going bankrupt that can't support their business because lack of volume and lack of margin within their freight spend to be able to take on the overhead costs. So what I'm really seeing moving forward is a lot of tech integration, figuring out how to use AI to automate systems, processes, and then obviously nearshoring as well, figuring out how can we be as profitable as we can, keep our customers happy, but use our resources to be able to take some of that cost and workload off of U.S. employees and put it on, office in Colombia, like what we do at Lean, or using tech to replace people in the U.S. so that they're able to keep the business profitable, even with the current margin compression that's been happening. And why a lot of these big brokerages, you've got Convoy, you've got some of these others that either went bankrupt or are in big trouble. A lot of the strategy in the past with landing shippers, getting new business, especially high-level enterprise shippers. Look at Niagara Freight or Niagara Bottled Water. Look at Conagra. A lot of these big food and beverage shippers. To be a brokerage and get into a company like that, a lot of times the strategy is to buy market share on a RFP, right? So shippers send out RFPs, and this is how they assess their network, and then they assign certain loads and lanes usually based on price and service. And then those carriers have that business contracted to them, and it's usually on a yearly annual basis. So that means when we go in and bid the freight, we have to look at a year's worth of data to kind of put our price in the middle so that we know, okay, we could be in a good spot to win this freight. We're competitive, but then also in the ebbs and flows, we're averaging out, and we're able to still keep a margin. So what was happening was, and a strategy with like the Uber Freights, all these big brokerages, is let's just for the first year go super low. We'll take the hit, we'll take losses so that we have this market share, and then the next year we'll prove ourselves with service. And we already have the lanes. It's a lot easier to keep it and just adjust the rate because you already proved that you did a good job, right? So the problem and with all that, obviously, is the market never shifted. So now a lot of these companies are stuck with this freight that is losing a lot of money. So these companies cannot figure out how to get out of the red zone. They just are bleeding without cutting off these customers. So that's why you've seen a lot of these big companies have basically halved, their annual revenue because they've had to cut ties with a lot of this freight that they accepted and couldn't, or probably still performed on, but obviously it was costing them a lot of money to take on this
It was
freight.
costing more than they were making, kind of a deal.
Exactly. Yep. And so, kind of similar with Convoy and not having the proper structure and forecasting in their organization, and then their operating ratios being so extremely high, it just kind of, it'll cause a lot of issues. Obviously, could lead to bankruptcy if it gets too bad. So that's why right now a lot of companies are trying to figure out, okay, what's next? If the market stays like it is right now, we need to figure out how to stay profitable and how to keep operating and still grow and scale to where they want to be. So, and that's where tech automation and then, looking at outsourcing or nearshoring your talent so that you're able to, again, keep the revenue generators in the United States making money, making the company money, but then they're all supported by either technology that's automated or, people that are more cost effective in other areas of the world to facilitate that. And I think that is kind of the next chapter in the book of transportation, is how now are we going to manage this new normal? And I think a lot of shippers, a lot of these big, your Niagara, your massive shippers that have over $1 billion freight spend, they're also looking at how they're going to operate with, the new models that carriers and brokerages are implementing.
Well, with that, let me ask this question: is from a business consumer perspective, and I'm talking about, a business to business type transactions and all that. A business is looking for, the transportation services for their supply chain to their end customers. What would you recommend that somebody needs to take into account based on this new business model you're talking through here, of what the struggles and all of that the current service providers are facing? If I am looking to say I need to, secure some contracts with some transportation companies, what is it that, from my perspective, would you recommend that I need to be looking for in dealing with somebody before I sign on to a contract?
There's a couple different things. I would say it does depend on the nature of the freight. So is it high touch freight that needs a lot of attention and kind of like a control tower of operations, or can you just book it and kind of let it sit? So for me, I think understanding the company's financial health, understanding their initiatives for moving forward, and how, like, if I was a shipper, I would ask my carriers, like, how are you guys planning for the future? What are you guys doing to adjust to the market and stay profitable still? Because as a business, you always want the other business you're working with to still be profitable, because otherwise it's not going to be a good partnership. There has to be wins for both sides. And it's also really important still, in my opinion, to have those relationships. And our industry is so old school that I think it's going to be a long time before those relationships really go away. And you see kind of a debate between digital freight brokerages versus traditional freight brokerage models, where one is like a no touch, no humans really involved, and the other is very relationship based. And a lot of the opportunity in our industry still comes from building those relationships, building up that credibility and trust, so that the shipper knows that if he or she gives you a contract, that and honor the commitment. Because there is, when you agree to that, yes, it's a contract, but a lot of carriers will just give back loads, give back their freight, and then the shipper is left stranded without any backup plan. So And that's why a lot of these large shippers don't really love working with brokerages, because a broker doesn't have full control over that carrier. We're a matching service basically. So making sure they are doing a good job vetting their carriers and their insurance is up to date, their authorities are in place, because it could put the shipper at a lot of liability. And that's another big issue in our industry is theft, fraud, a lot of stolen loads. There's a lot of this going on, and it's not great. I hear of companies every day that are getting hacked, and their loads are getting posted. A lot of double brokering. It's and that's why you're seeing a lot of these new tech companies coming into play that are helping to get around this. Carrier Assure is one of them. Carrier 411, a lot of those that vet the carriers and put a grade to the carriers to make sure they are good for your customer freight. So that's why a lot of shippers are trying to stay away from brokerages and go direct to the asset companies. But again, the asset companies they operate in a cost per day or usually a cost per day model. And so they have to understand the cost of the truck per day. And with assets, there's not a lot of wiggle room. This is what we cost and that's it. Where brokerage, you have that flexibility to go up and down and be able to negotiate with your carrier partners. So it's for a shipper, brokerages are a must if you have seasonality and a lot of like volume fluctuations and you need a brokerage partner to be able to take some of that. But then their core business, they're really pushing to the assets because they then have full control over those drivers, and those drivers are employees of the company, and it's not a third party in between partnership.
Yeah, but the trade-off, though, is dealing with a brokerage firm. They're able to source out to multiple things. If you want to take that in-house and you're going directly to the asset company, that's fine. But now you're going to have to keep up with all the different locations and try and make those contacts. I mean, the trade-off there is a brokerage firm already has the relationship with so many different carriers across the board. That's where I caution people. Be careful of being penny wise and pound foolish. Yes, you can go directly to some of these companies and get a better rate or whatever the case is for a specific lane. But then the trade-off is, that company doesn't run on this lane route that I need to take. Now I've got to spend my time to go check somebody else, or hence you go back to a brokerage firm. Let me shift gears here. What about from a transportation side, a service provider? Let me put it that way. That would be, say a brokerage firm is one, but then the other is the actual asset company, as you were talking about. From their perspective, what should they be doing? I mean, I've seen a lot where of most recent, people have pretty much stopped trying to, if you will, buy the business, as you say, going in low and just say, basically, here's what I've got to have, or here's what my rate is, and they won't go but down any lower. And people try and beat them down, but they, in my opinion, have to be prepared. You're going to have to walk away from that business if they're saying, well, my rate's, $1 and no, I want 75 cents. It's like, I'm sorry.
Yeah, absolutely. I would say, and again, I'm working with a lot of freight companies. So I'm talking every day with CEOs, trying to figure out what they're doing, what their plans are. And I think the gap is not understanding your operational costs. And so whenever I kind of consult with companies, I ask them, like, what is your cost per load? If they can tell me and they understand their cost per load, how much it takes from start to finish, then usually they have a pretty good grasp on their operations. But I think, again, that is a gap. These companies are not understanding how much overhead they have and how to get new business that actually works for the shipper partners. So when I was always in sales at my transportation companies. So when I look to land new customers or win freight on an RFP, and I know, I just worked at a startup. We didn't have a cash reserve. We couldn't go under DAT and bid under DAT against and compete against the Ubers and the Convoys of the world. There's no way we couldn't do that. But what we could do is guarantee our service. And how we do that is strategically selling based on, their lane needs. So when I get an RFP, I'll usually first connect with the shipper and say, hey, which of these lanes are you actually looking to award? Because again, it's a relationship industry. So a lot of, there might be 1,000 lanes on a bid. Well, if I'm going through and spending a ton of resources to look and bid on every one of those, it's probably never going to be a great win, because then the shipper is like, if you can do everything, then you can't really do anything. You don't have a niche. What shippers want to see is strategic partners that are like, hey, I see you have a Nashville to Charlotte lane. I have 4 carriers on that lane that run this every day, all day long. We would love to add this lane to yours because we have a truck going there anyway. We're already there at both of your locations. So let us try this lane. And, you're basically guaranteeing service because we're already running that every single day. And then you're also guaranteeing capacity, because if this carrier isn't able to take this, you have 3 other carriers that run this on a regular basis. So being able to kind of show the value and help them see, again, all we're doing is really connecting the assets with the shipper, right? So showing that value and not just saying like, here's 500 of the lanes and here's really cheap rate, and they might award you 1 or 2 of those lanes. This way, you're really pushing like, I have a great group of carriers that run this every day, all day, and we're competitive, and you'll get service and capacity no matter what. That's what shippers really want to see. And then they're willing to pay a little more for that guarantee of service and capacity.
The guarantee and the consistency is what I'm hearing you say is basically a company needs to take and identify what their strengths are and then leverage that for the business on that particular area rather than trying to be the jack of all trades.
100%. And, I had shipper partners all the time tell me, if you bid on more than 20 lanes, we don't even look at it. We throw it away. So I think it's really important to be very strategic, because again, we want to come in as a partner and not just and it has to be a win for both people. So I always put myself in the other person's shoes. Well, here instead, this is a real partnership, and this is, going to be long-term. I'm not just offering you rates for the first year and then we're going to jack our prices up because we have to recoup everything we lost in the last year. Now it's more like, here's a strategic partnership, and we want to work with you to understand your operations and figure out how we can provide the best solution, which is, again, like the strategic partnerships with the carriers. And it all starts with the carrier reps as well, being able to understand their carriers' strengths and their modes, and I worked at a company and we always said, work trucks, not loads. So instead of every time there's a load on the board, you work it with a one-off carrier. Well, no. Let's instead work the carrier and go to the carrier. What do you need? What are your main lanes? Where can I help you get to? Maybe they need to go home every Wednesday for their son's basketball game. Okay, if they have a broker that's thinking about those things and helping them kind of plan out their weeks and be the dispatcher, if you may, for these asset companies and be the salespeople for them, that obviously then creates that buy-in for the carrier, and they want to keep your business because now they have a cheerleader for you that's helping them, one, make money, 2, have consistent volume, and 3, help them get home or do whatever they need to do. So those carriers are going to be able to provide better service. And again, then the customer is going to be happy because they're getting a competitive rate and service and capacity and that guarantee of kind of coverage always. So,
well, that's where I will also say and I like how you put that, work the truck, not just the load, is I've seen companies where they are nickel and diming it. Basically, they have, all this business across the country coming out of different, and it's almost they're shopping different carriers out of the same location or different, wherever they're going. And in looking at it, literally, I've watched where in a 5-day work week, let's just say Monday through Friday, out of one location, they'll use 5 different carriers, whatever the best rate was. To me, though, the problem with that is that then that company, that end customer that's hiring for all this stuff to be moved, they're spending a tremendous amount of time going to different companies, trying to manage it and track and trace it and like, where are we at and what's going on and this one and that, rather than dealing with one company or maybe 2, but it's, dealing with one and saying, make it a win-win. So quit trying to, browbeat people down. Well, in the end, I figured up and was pointing this out to some of the upper management. Look at your resources, the employees of that company managing all of that different stuff, because they're somebody has convinced them, yeah, we can get spot rates, if you will, on different, carriers for the different things, rather than stepping back and look at it holistically and go, let's see if we can't get a more aligned, if you want to call it a partnership or a client supplier relationship where both win, and it works out in the end. You look at things holistically and both companies win.
Exactly. And the carrier wins. And, the backbone of our industry is still the drivers. And I think that's what a lot of these like digital platforms, like the Convoy platform, I think that's what they lack is the carriers. Yes, for flexibility purposes, they might like using that platform. But as far as like issue resolution and having a person to deal with detention or like, hey, I'm stuck at the shipper, help me. I think that is going to be really tough for our industry because we're still kind of in the dinosaur ages. Like the industry is, I would say, I don't know, what do you guys think? 20 years behind compared to the technology that's available today. And it's going to be really hard to just change that overnight. And a lot of these, old school truck drivers are not going to be in tune with only working with the platform and trying to call somebody and get help. So I think a lot of carriers are still going to want to work with a traditional freight brokerage model because of the fact that there's just more care and attention, hopefully, for the good freight brokerages, let's just say. And also they can have a brokerage, again, like I said before, work for them and be the salesperson to set up a good life for them. And it doesn't always have to be chasing every single load. A lot of carriers will book the loads, the day before and just try and find the highest rates. Is that really the best? Or would you rather have consistent freight that what you're bringing in every week? You don't have to go and chase a load here and a load there, and then you might not get it, and you might be sitting for 2 days, and you're scrambling to try and figure out, and then you have to pick up a load here, and you have to find a new load to get you to here, and then the only thing available is a load that has no money in it, but you have to take it because you have to pick up your customer freight. And it's, if you have somebody that's helping you and working with you to set that up for you, I think it just can make a lot of these carriers' lives a lot easier. But with that being said, there's a lot of brokerages that treat carriers like garbage. So I think putting our focus back on like, how can we better integrate with the carrier partners to support our customers in the best way and the most efficient way And how can we optimize some of the routes? And I think that's part of the next phase of our industry is route optimization and shippers even working together to create those efficiencies. And that's what a lot of shippers are really looking for too.
Well, not only customer relationships, but also vendor relationships, and literally taking it to the next level where they're sitting down and talking about, well, route optimization, just like what you're saying, and the whole scenario there, and seeing if you can come up with a mutual win-win solution that is beneficial to both.
Absolutely. Sustainability, I would say, is another, hot topic for the shippers. It's a big incentive from like C-levels at, the Starbucks, the large corporations. And to be able to provide sustainability in a carbon emissions savings with pairing freight together. So even shippers are working together now to pair their routes. There's a couple companies, Leaf Logistics, a couple others that it's really interesting in what they're doing, where they're taking freight from multiple companies, getting a big chunk of freight and lanes from a lot of different companies, and then combining them and figuring out, okay, here's one loop, Atlanta, Charlotte, Charlotte, Atlanta. And they sell it as basically one. So then you're able to, in my last company, we're able to build off of that. And the carriers love that because, again, it's consistent, it's sustainable.
We had Craig Fuller on our show a while back, and he was actually in Cartagena as well in the conference. And he talked a lot about how there's a lot of shifts in supply chain for like geopolitical, environmental, like the Panama Canal thing that happened, and then economic or whatever might affect the supply chain. And we're seeing a lot more nearshoring, and not your kind of nearshoring, because your kind of nearshoring is more like back office and not manufacturing. So talking about nearshoring for manufacturing, companies moving into Mexico, Colombia, like you said, even Central and South America, to be closer to the United States. How do you see like some of those transportation or logistics? Like, are your customers seeing that shift more? Like now we have a lot more land shipments versus ocean. What are you seeing the trends on that? Craig alluded to it, but this was back in November, October when we interviewed him. I'm just kind of curious to see how that might have evolved since then, and if you and your clients have seen any of that as well because of all those shifts.
Yeah, it's been a huge focus in our industry. And specifically because, when you're looking at over the road domestic transportation, a lot of companies steer away from going into Mexico because we've heard of, nightmare stories that trailers getting their rims stolen and, it's a huge liability. So not a lot of companies have put in the effort to really make relationships and connections in Mexico that they can trust to be able to run freight across border for them. But that is a huge push right now in our industry. And I've been talking to a couple of shipper partners, Constellation Brands, a lot of these companies that have already been doing a lot of cross border and have operations in Mexico. And it's been a big challenge for sure. And so I think a lot of companies are trying to capitalize on that right now and figure out how they can better support Mexico operations for their shipper partners. And I think that's a big selling point as well for potential package deals for like domestic freight and cross-border freight, if they can have a solution for that. I remember when there was all those border issues and trains were shut down. It was a huge pain point for a lot of those shippers, because then a lot of this freight that was running on the rail before, well, now the rail lines are shut down. They had to move it over to dry vans and find reputable carriers to be able to cross border that freight and go to different locations in Mexico that they may not have been very comfortable going to, and figuring out the best way to be efficient and optimize the connections and routes within Mexico. So as more companies are moving their manufacturing operations down to Mexico, I think there's going to be a lot more tech platforms. You have Matt Silver's platform that does that, like kind of looks at cross-border operations. I think there's going to be more of those coming into play, and I think it's going to be a huge focus in the future of our industry.
The other scenario here is like, as you were talking about some of the margins that people are having to deal with and the repercussions thereof and what the future holds. I mean, we've got an election coming up that's going to play havoc on the markets and the economy and different things like that. And depending on who wins and what the expectations are, and some of the other impacts of the geopolitical tensions, as well as geographics such as the drought in Panama through the Panama Canal and all that. And hopefully it is getting more rain. There's talks of that, but it's still, they are so short on that. So the frequency of ships coming through there affects then the ports and the trucks thereof and the port congestion, et cetera. So how to deal with all that's going to be another thing. Abby, I will just ask one other thing, though, is if somebody is interested in trying to improve their operations or their margins and things of that nature, is that something, what kind of information would, if they were to reach out to you, as a preliminary here, what would they need to pull together to make it a more productive initial meeting with you?
So for me, I really love to understand your operations. Are you operating first I start with sales. Are you cradle to grave where your people are landing the business and then managing that business and trying to grow the business? Or is it more of a style where it's sales and customer service and operations are split? Because I think there's a lot of ways to create optimization and efficiencies within an organization. So I really want to understand if the organization knows their costs of operating, because that's the first thing I have people look at is, what are your operating costs? I talk to companies all the time where it's like, well, we have 20 branches. There's 5 people in this office, 5 people here, 20 people here, so-and-so people here. And then their account managers are doing all aspects of the operations. They're tracking and tracing, they're booking the loads, they're trying to get new freight from a customer, they're then going to deal with retention and POD retrieval and all these things. And I think if you're an organization, figuring out how you can take some of those entry-level roles and, again, either automate or outsource those to be able to keep your revenue generators in the US and your salespeople still going out and trying to land new business and keeping their pipeline in check and creating those relationships, deeper relationships with your customer partners to create that stickiness, so that no matter what happens in the industry, all the volatilities, like you mentioned, the labor shortages, the rise of e-com, the presidential election, issues still after COVID and the volumes, all of that can be talked through a relationship. You have that strong relationship and are sticky. So figuring out how to insert yourself in multiple different areas within a customer relationship. And then looking back into your operations and figuring out where you can kind of skim from the top. Brokerage model is not as profitable as it once was. So we really need to reassess the workload and figure out, okay, are these entry-level track and trace employees really as productive as they can be? And why would we not, look at nearshoring to fill these positions, save some of our labor costs by 40%, and still keep our heavy hitters on the front lines. So I think that is something that a lot of companies need to look at. And then obviously down the road, automation and tech take a long time to implement and a lot of money as well. So, but I do think that's going to be a huge push for a lot of organizations to be able to stay in the mix and be profitable.
Well, to have a IT or a system strategy, I mean, literally, you need to have a plan. Yeah, you can have, and you don't always need to go for the latest, greatest either, but it's like certain things as you identify it, don't try and take a shotgun approach for trying to do everything all at once. More of the sharpshooter. What's your strategy? This particular segment of the functions could be automated if we implement something, but have a phased approach. Don't do it hodgepodge, but we can start here. Here's the next one and all that. But look at that and plan that out. A lot of good planning ahead of time and discussions with like you're saying, or having those discussions and then, working with your clients and developing that kind of stuff to where it's like, this works. Here's your stepping stone, to, from step 1, 2, 3, 4, 5 on down the road. That, will definitely in the long run give you the margins you're looking for more consistently and help avoid the ups and downs.
Absolutely. And also partnering with tech companies, to help better assess productivity and your workforce. So like, I just got introduced to ISO, and what they really do is kind of put a scorecard to your operations. And that's warehouse, you could be a warehouse, you could be a freight broker, you could be an asset company, or like AVRL, who is integrating your spot operations directly into the shipper's operations without API. Or, you look at, I have a couple others, Manifold Freight is starting, and they are compiling all, you might have 30 different load boards that you're looking at all day. Well, that is super inefficient. So what they're doing is combining all those and integrating it into one platform. So looking at solutions like those to better create efficiencies. I feel like I've said that a million times, but it really is the true, important part of the transformation in our industry right now is how can we create efficiencies, optimize results, get the most out of the US employees, and collaborate with companies to help uncover, missed opportunities or areas that should be able to create better margins with less work. So I do feel like that's, and obviously then nearshoring as well, and figuring out how to move some of those tasks to others that can have that same productivity at a lower cost.
Well, folks, we hope that you've enjoyed today's discussion. Lalo, we'll have Abby's contact information with her company and all that with our show notes. Any last comments?
None on my end. Abby, do you want to have anything in closing? But I'm good right now. But thank you for coming on our show.
No, I really appreciate you guys having me on, and can't wait for the next time.
Mm-hmm. Well, folks, we appreciate you with the SimplyTrade podcast. Like us, share us. We appreciate your listenership. And with that, y'all have a great day.
Thank you very much for joining us. SimplyTrade is brought to you by the generous contributions of Global Training Center. You can follow the show and GTC on LinkedIn or Twitter and other social networks. Make sure you check out the show notes in the description for a full rundown of today's show with all the important links. Also, make sure that you share this with a friend and subscribe on your favorite streaming platform. We really like hearing from you. If you enjoyed the show, make sure to rate and review wherever you listen to this podcast. If you or someone you know would like to be a guest on the show or would like to sponsor SimplyTrade or suggest any topic you would like for us to discuss, please contact us via email at simplytrade@globaltrainingcenter.com, or you can DM us on Twitter at SimplyTradePod. Thank you again for the privilege of your time. Happy trading. SimplyTrade is not a law firm or an advisor. The topics and discussions conducted by SimplyTrade hosts and guests should not be considered and is not intended to substitute legal advice. You should seek appropriate counsel for your own situations. These conversations and information are directed towards listeners in the United States for informational, educational, and entertainment purposes only and should not be substituted for legal advice. No listener or viewer of this podcast should act or refrain from acting on the basis of information on this podcast without first seeking legal advice from counsel. Information on this podcast may not be up to date depending on the time of publishing and the time of viewership. The content of this posting is provided as is. No representations are made that the content is error-free. The views expressed in or through this podcast are those of the individual speakers, not those of their respective employers or Global Training Center as a whole. All liability with respect to actions taken or not taken based on the contents of this podcast are hereby expressly disclaimed.